here are some tips on how to pay less taxes next year. First is to HODL. If you don't sell, you don't owe any taxes. However, try to hold on for at least a year before selling, as you probably will qualify for a lower tax rate on the capital gains. You can offset your gains with losses, right? So you might have some losing investments in your portfolio. It happens to all of us. They don't even have to be crypto. And you can unload at a loss if you want to cash in on a big crypto investment and offset with those losses. If you end up losing substantially more than you gain in a year, you can deduct up to $3,000 in the excess losses against your personal income taxes, as well as carry forward any unused losses to offset future investment gains. Now, wash trading is a no-no in equities and stocks, right? Meaning back-to-back trades meant to generate losses and then start the clock again on gains does not count against your taxes. The IRS doesn't recognize that. However, with crypto, that isn't true. In other words, you can sell for a loss at 9 a.m., immediately buy back at 9:01 a.m., and report the loss on your taxes. Now, I assume this loophole will eventually go away, but for now, the loophole is there. It's referred to as tax loss harvesting, and a lot of people are doing it. I don't need to do it. I'm simply not selling, so it's not a problem. But for those of you who are, I know many people have done this in order to basically create a tax loss event to offset gains. Now, as far as I know, again, please speak to a tax accountant / tax advisor who knows this. But my understanding is that is perfectly legal in crypto. Well, it's not. It doesn't basically generate the loss in equities. And at some point, that loophole will probably go away because the IRS doesn't like loopholes that cost the Treasury money. The third option is to donate to charity. You can deduct the full amount of any crypto you donate, including gains. Right, that's pretty cool. And you can consider using a company like the Giving Block for donations. We've had them on the show. The co-founder, Alex Wilson, great guy, love the company. His company makes it really easy to put your crypto to good use for almost any cause you want to help out. Okay. All right. And then the fourth option, of course, is mining expenses. If you're a miner, the money you spend on computers, servers, electricity, and the internet connection can all be deducted. The deduction amount varies depending upon whether your operation, again, qualifies as a hobby or as a business. So if you're really doing this as a business, you can probably get even higher deductions for those expenses, right? And then lastly, you should time your tax rate, kind of a bonus point. If you've retired, gone back to school, moved to a state with a lower tax rate, you might find yourself in a lower tax bracket. A lot of our friends here in crypto land have moved to Miami or Puerto Rico, and they've timed their crypto sales to coincide with those moves to tax-friendlier jurisdictions.